All right, good morning, guys. What's up? Hope you're all doing well. It is December 8th, Wednesday morning. Let's get jumping on in here. Before anybody asks, because I know someone's going to ask, the this big white line right here is the weekly 21 EMA. So now I got the weekly 21 plotted on the daily chart to kind of just drive home the point of what I've been trying to focus on with y'all over the last few weeks. If there's ever going to be anyone that's going to tune out the bullshit in the news, it's going to be me. So my whole focus over the last few weeks or so is before I jump ship on all my long positions and before I try to short the entire market, let me try to practice a little bit of patience just in case, once again, all we're getting here is just a pull back to the weekly 21. Up to this point, that thought process has served us pretty well here. Daily chart, 4-hour chart, 5-minute chart, 1-minute chart, they're all going to get busted as your weekly chart goes from +3 back to the 21. But in terms of the structure of a bullish trend, it's a reversion to the mean. It's a reversion to the mean. So the thing being here is at no point in this entire uptrend have you been served well trying to start to swing trade puts at the weekly 21. So if you found yourself in that boat where you're coming into this week swing trading puts, for future reference, keep that in mind. I think the easier short, and the short I would try to give y'all, is we break the weekly 21, then on that next bounce, then we get short. You really got to try to crack through weekly support, though. But that's only one piece of the puzzle. It's one thing to pull back to the weekly 21, but then you need your daily chart down to your 5-minute to kind of rebuild itself. You need that shift of momentum. You got to get a bit more structure going. So in terms of the daily charts here, yesterday was really impressive stuff. I don't know if we're out of the woods just yet. Call yesterday a really good head start here for the bulls. The key is that if you look back over here, you can find support down at your weekly 21, but then once your daily chart has some bullish characteristics to it, there's the push we're looking for. So yesterday for the Qs, that's a pretty good start. At this point, the level I'll give you here today, which other than your all-time high, this is pretty much all you got. 16,400 plus. 443, 445, just pretty much this level of resistance right here. You break and close above that, I think we're off to the highs. And for the S&P here, you kind of crazy fashion yesterday, just totally slammed the shorts right through that 4,600. At this point, you start to get a couple closes back above 4,700 and change. You're a sneeze away from all-time highs. So your two major indexes there, really good job yesterday as far as getting back above the 21, hammering the shorts and starting to put in a bit more structure. In terms of momentum, definitely an improvement here. So I think Monday or last Friday, you had 10x bars, red 10x bars rather, all over the place. So you got the shift of momentum here. Daily, 4-hour, 2-hour, 60-minute. You got your bullish momentum. And then for the Qs, definitely some improvement here. So your two major indexes, really good stuff yesterday. And then in terms of, you look sector to sector, energy back above the 21 EMA. Financials back above the 21. So you go sector to sector, industrials, healthcare, transports, pretty much everything yesterday participates. And it's not that I think, hey, let's buy the transports now. I don't think we should come in and start to buy the industrials. I think we focus on the QQQ and the semis. But if sector to sector, everything else just kind of stabilizes back above the 21, at that point, I think the market has the total green light. And then you look for QQQ, SMH, continue to trend into the end of this month, early January. Now for the bears here, for them bears, if we happen to pull back to the 21 EMA and we can't hold support there, I think if we, you trade back under the 21, the bears start to take a little bit of control back. Above the 21, though, I think the bull is in the court of the bulls. So we'll see how things unfold here. But we have done a little bit of dip buying. So last week in my mastery, we got 380, 375 put credit spread here on the QQQ. So we're getting some good premium coming in there. We still have Amazon for January expiration. And the whole focus here is the weekly squeeze, which still I think looks really good. But in terms of adding more exposure, very much like we're looking at in the markets, I'm looking for a bit of a cleaner daily chart here. So if Amazon could give us, probably look at it into Friday. If we can close Friday above the 21, probably add to the January expiration positions we got there. Let's see, you got some Tesla. Still holding some Tesla, so I'd like to see this back above the 21 before I add more exposure. One of my major spots that I did want to get some here is get me a little bit of, on this dip was the semiconductors, which pretty much is clearly your leadership at this point. So you have NVIDIA. I mean, NVIDIA looks great. I prefer a little bit of a dip, a little bit. But AMD, I think, is a buy right now. So we picked up a little bit of that in the mastery yesterday. Probably going to get the options room into some AMD today. But it all continues to look really bullish here, my friends. The semis and QQQ, that is. So I think, as energy tries to stabilize, the financials try to stabilize. Mainly, if your small craps could start to stabilize back above the 21, I don't think we need to get, I'm not going to look to play the industrials. I'm not going to look to play healthcare, financials, and energy, at least not right now. But my thinking is if they can all just trade back above the daily 21, then the market gets the green light here for your QQQ, for your semis, to keep the party going. But those are your key levels as far as, where the bulls really pretty much, I think, finish off the bears here. S&P, you're looking for a strong close above 4,700 plus. Just pretty much that whole layer of resistance right there. And then for the Qs, kind of look at, again, 16,400 and change. The exact number doesn't matter too much. You can see the level of resistance we're looking at here. So I think if we break through, bulls take full control. If we get rejected here, to me, what's really going to matter is the first potential test of the 21. We come back down, we break the 21, then maybe the bulls are trapped. So you look at a kind of bigger range here, you're looking for a break either which way. My thought process is to the upside. We'll see how that unfolds, though. And I got a watch list here of about, 100 good-looking daily squeezes. I'm not going to go through all of them. I'll share the watch list with you, though. That much I can do. So I'll put this in the chat over here. And if you're interested, take a look. You got things like NVIDIA, Nike. We'll go through a few of them here, but all good, clean stuff. So put that in the chat. Oh, so yeah, Angela, for Netflix. So for the trade that we had in the mastery, expired next Friday, our short puts were at 620. We bought that spread back yesterday for just about break even. I think we were about 25 cents off. But we bought that back for break even. And then for the position I have in the mastery, or the options room rather, up here at 650 with the short put. Going to give that a little bit of wiggle room. But long story short here, trying to get out of both positions break even or as small of a loss as possible. Because in terms of daily structure, it's totally busted at this point. Stacked DMAs are gone. Firing a daily squeeze to the downside. Now, if I had 45 days left till expiration, I'm going to hold here because the weekly chart still looks really good. This might just be your pullback to the weekly 21. The situation we're in, we only got until next Friday. So we're sneaking out of there about break even on the 620 trade. Trying to do the same here on the 650. We're going to need a pretty good bounce, though. But the major thing being, the reasons that we originally took the trade, bullish daily chart, trading at the buy zone, stacked DMAs, getting some buy arrows, green 10x bars. At this point, all of that's gotten tossed out the window. Where, say, Amazon, as we're trading that weekly squeeze, I'll hold on to this and I'll add to it because it's still the same setup. All right, but I got you all the watch list there. So yeah, Eli, we'll go through a few here. Start taking some chart requests. Let's see. So Angela, for Netflix, you got the expiration date. I wish I had. 6:40. Angela, I would give it more time. And you have time, so it's not giving it time here. It's kind of giving it a line in the sand, which for me at this point after the bounce should be your weekly 21 EMA. And it's not to say Netflix is back at 700 in the next couple of weeks here, but in terms of good bullish weekly structure, you fired a squeeze, big time push, and you've pulled back to your daily your weekly 21. This is where you should find support. And you're sitting on, about a month and a half here, looking for about a $20+ move off of big time support. I continue to hold that for now, personally. All right, hey, what's up, Eli? So for Nike, the only thing, if I could say anything bad about it, because it looks really good, earnings is in a couple of weeks. So you pretty much got all of next week. I'm looking for, 30+ days here. Just trying to give the market a bit more time to figure itself out, just in case it's not, this blind shot right back up towards the highs. In terms of Nike itself, though, I mean, this is really, really solid. Stacked DMAs on the weekly, the daily, green 10x bars, and a squeeze. It's just about as good as it gets. Just about as good as it gets. All right, next up. What's up, Kishore? UPST. Let's see. So these are always, especially in the options room, like the chart requests for me, they're always so easy. Because I'm just not going to personally trade it unless it looks like this. I'm just kind of the one-trick pony who trades the bullish daily squeeze in an uptrend. Now, in a downtrend, then I'm looking to take these things short. But whenever I look at a chart, that's just what goes to my my mind. Is this my go-to setup? If it's not, I'm already going to go on to the next one. Now, in terms of upstart here, you're oversold. You're definitely oversold. I think a lot of things in this market, right? So if they keep on just spanking the shorts here, this is a little bit tongue-in-cheek, but everything is going to bounce. So if your S&P 500 breaks through that resistance, rips through the highs, you're looking for a bounce everywhere. So if you can kind of get that, get that, that short squeeze to unfold in the market, continue to unfold rather, things that are really oversold, they're probably going to be setting up for a good bounce. So that's kind of what I would work with here. And I'd be looking for a bounce back up to the 21. Market keeps ripping here. It should be good for that over the course of, a week or so. But that's all I would do. I take it to the 21, take profits, and then maybe try to short it because you're still in a bit of a downtrend here. But everything should bounce. So, these things that are oversold, probably going to have some of the stronger bounces. Gamma. Ford looks awesome. Probably not the best candidate here for a put credit spread. There's just not too much premium. Some in-the-money calls for January monthly expiration. Sounds good to me. Got a real trend trying to get going here. Weekly and daily stacked EMAs, green 10x bars, daily 4-hour, 2-hour, 15-minute squeeze. So when I look at a chart like this, I'll get long, and if it doesn't work, I could care less. Because my thinking is if you take 100 trades in a row that have this kind of combination of trend, squeeze, momentum, you're going to come out on top after 100 trades. So to me, this kind of fits that bill. Market looks supportive of longs. Yeah, I'm probably going to grab some forward here. Now, this trade might not work, but if the next 100 have the same criteria, we should be coming out on top. So forward in that regard, very, very clean. Next up is Roku. So probably going to be another one here where you're in a downtrend. So that's the first thing we have to at least acknowledge. If we're getting long here, we're going totally counter trend. Now, to your benefit right now, trying to go counter trend, again, you might have that timing in the market where everything's going to bounce. And Roku is just about as oversold as it gets. You're down at minus 3 ATR on a weekly chart, and you're getting a ready aim fire buy signal. You're starting to get a shift in momentum here. So Roku probably a good candidate for one of the things that might give you the strongest bounce in this market. And as we're saying this, it looks like we're going to gap up at 227 this morning. I look for Roku back up towards the daily 21 EMA, 230, 235. You're oversold, but you got enough momentum shift, a couple of buy signals, and then again, overall market could get you back up towards the 21 EMA. Hey, good morning, Warwick. So you mean the beast formerly known as Apple? One, right? I mean, there's not to me, my little universe here, there's nothing that looks more bullish than Apple. For me, the tough thing at this point is, unless this pulls back to, 164, 162, and mind you, I think it continues here. It's just a bit too extended for me to do that, 30-day till expiration swing entry. Now, I think Apple's kind of going to be on crack here. So what we could do is just kind of dial down the time frame. An extreme example, but if you could find that next 15-minute squeeze, the next 30-minute squeeze, I don't know why things are looking so funky here. But just dial down the time frame, Warwick. Assuming we're not going to get that, buyable flush to the 8 or the 21, should the party continue, the best way to find your entry is going to come from that break in the action on your 15 to 30-minute time frames. In terms of a target for the old Apple here, something like this, you're running through big, pretty numbers. So, as we plow through 170, 175 has a pretty good ring to it. So Warwick, call it continuation trades. So the trade that we did, in both of the rooms back here, there's no party just yet. So we're getting in here a little bit early in anticipation of that big move. Now it's all about the continuation trades. Try to buy the little dip, find your lower time frame squeeze, and they'll serve you well as long as it keeps on grinding here. If anything, you scale down a position size a little bit. I'll risk 10% back here, maybe 2.5%, 3% up there. Looks crazy strong. Mr. Singh, how did I manage to get the weekly 21 on the daily chart? Fortunately for me, here it's simpler. I've got pals who are a whole lot smarter than I am. So one of the legends behind the scenes helping me out with a few things here. which I'm sure we'll be able to talk about in a lot more detail soon enough. Yeah, Dustin, this is a really good question. And this was kind of so March 2020. This was kind of my first like real opportunity to kind of put my foot where my mouth is in terms of kind of what I've been preaching over the last couple of weeks here, structure over everything. And I think one of the best things that I did back in March 2020, and mind you, the market was so strong, so you didn't have to be a technical analyst to kind of get a sense of, okay, this thing's getting goofy here. But this to me was really like the most profound example of structure over everything, where early April, early May, weekly charts in the indexes completely regain structure. They're back above the 21 EMA. They get their stacked EMAs back. Positive histogram. Bullish structure led to a bullish trend. And we haven't broken that bullish structure since. To me, that was a really important lesson, though, because during that period of time, like the news was at its worst. New York is shutting down. This place is shutting down. You got restrictions. You can't travel. Like all the BS taking place here. But structure over everything. Market gives you 1, 2, 3, 4, 5 closes, 5 weeks in a row back above the 21. The news is trying to tell us one thing. The market very clearly is trying to communicate something else. So on a day-to-day basis, as I try to abide by those same things, that to me is just one of the better reminders of at least what works for me as a trader. Can't focus on the news, can't focus on Twitter. To an extent, can't really focus on even people who I respect's opinion. Structure has to come first. Had I not had that mentality and kind of bought into the fear in the news, like how long do you wait before you start to dip your toes? Like, nope, this bounce is BS. This market's going to roll over because of ABC. So to me, March, April, May 2020 was just like the ultimate like reminder that that's what I got to focus on as a trader, not what's going on in the news there. It was a great question. Great question. All right. Good morning, Michael. So Facebook here. So Facebook's biggest issue has been communications. Facebook, I think your biggest or your second biggest holding here, along with Google. So that's been Facebook's biggest issue. It's part of a sector, the worst looking sector, which actually at this point is the only sector, at least the things that I look at, it's the only sector here that hasn't really started to rebuild its daily chart. It could be a slow process, so momentum is trying to shift, but you're still well under your 21 EMA. Potentially this continues to hinder Facebook. I think what does Facebook a world of favors here is can XLC just get back above the daily 21 EMA and stop the bleeding? If XLC can stop the bleeding here, then I think QQQ is going to take both Facebook and Google to the promised land. In terms of Facebook, though, right, just based on that whole discussion right there, Facebook, Google being major components of XLC, if we acknowledge that, then admittedly here, we can't quite look at XLC just yet and say this chart is trying to fix itself. So in this circumstance, let's call it, hey, we might be getting here a little bit early. I would go with the better looking structure, which at this point, to me by a landslide, is Google. Let me know if that makes sense, right? But with both of them basically being, the twin towers of the communication sector, in the communication sector, still leaving a lot to be desired as far as, the structure of that daily chart. If we're jumping into something in XLC right now, based on the structure of Google versus a Facebook versus a Comcast, Google's got your daily squeeze, 3-day squeeze, weekly squeeze. bunch of, good amount of green 10x bars here. Facebook's got a little bit of work to do. So if anything, I'm giving Facebook until, February, March, perhaps. But do let me know if that makes sense in the comments here. I go with Google over Facebook for now. All right, there's Roseville. Good morning, Roseville. TXN, very nice weekly squeeze. Good looking 3-day. So here's my only thing with both TXN and TSM. When are we going to finally get something going here? Especially with TSM here. You look at other names in the group, they've trended. That's trend. AMAT is better trend. Right? Broadcom, that's trend. So when I look at TSM and TXN, there's Chandler in the options room. That's the only thing. It's like, hey, is it finally going to be go time here? Because we've seen this movie before. Everything's gearing up. You get to the top of your range and you fade. You get to the top of the range and you fade. So maybe this is the charm. Right? Whatever attempt this is, maybe this is the charm. If anything, I'm going to give a swing trade here plenty of time. Because you can just see how we're range bound. And that daily chart looks really, really bullish towards the top of that range. Still knocks you back down. So to combat against that, I think you do one of two things. One, you give your swing trade all the time in the world. January, February, maybe March expiration. Reduce the chances of getting caught up in all this back and forth. Or, which I'm typically not a fan of, but in these situations, wait for the breakout, wait for the next dip, then build your long position. Wait and try to get long as it looks a bit more like we're going into trend. A good example of how this is going to get you into a good trend is Netflix. Right. Netflix finally breaks that range. You get your first pullback. Resistance turns into support. That's the easier trade. Now, if you can load up on Netflix in here and you catch that initial push, it's a home run. But that can be a tough break. So that's the easier trade, I think. This is also going to keep you out of false breakouts, where as of right now, the small caps, they certainly look like a false breakout. You wait for the breakout. You wait for the first pullback. And if previous resistance doesn't turn into support, you're probably looking at more chop. So I think with these, long-lasting weekly squeezes, those are your two options, at least to me. You build a swing that has all the time in the world, or you wait for the breakout, you wait for the first flush, then you try to buy that dip. To your point, though, Roseville, no better time than now, because they do look good. They do look good. So, Angela, in terms of NVIDIA, I like any dip on any time frame. Look how strong the semiconductors look. So I don't think the trend in the market continues, and the semiconductors aren't playing a major role. Just based on the charts right now. So NVIDIA, AMD, AMAT, I like it all here. So 300 short puts in a spread and then a dip. I like that a lot. One of the better looking daily squeezes. Monthly chart down to a 15-minute, you have green 10x bars. So you're not going to get much more momentum than that. Maybe the 5-minute is a deal breaker, but it's packing a lot of momentum there. Packing a lot of momentum. All right, next one up here from Rick is Cube. Nice. Very nice. Got your squeeze, stack DMAs, momentum starting to shift. And the best thing is it held up like a champ during all the volatility here. Good looking setup there in cube. Yeah, my brother's keeper. That's the book. Tell you guys that as much as I can. You got to read Mastering the Trade. Right? Because to your point, everything I try to apply pretty much right out of the book. If you haven't read that one yet, guys, you got to get into that. Okay, DQ, is that what's going on there? Yeah, I got a couple new indicators, and I don't know how to work them quite yet. That's a good tip, though, from the big DQ. Fun fact for everybody listening in here, Dylan is about 7'1", I think. Ooh, good question here. So, Fairs ask, what if it's a great setup, stack DMAs, all the good stuff, but it's trading under the 21 EMA? Is that a good or a bad setup? When we start to trade under the 21 EMA, and then momentum starts to shift to the downside. So here's your poster child. Netflix begins to trade under the 21. Just one example of momentum. Look at your histogram. So if we're above the 21, there's a greater likelihood we're going to push to the upside if you have supportive momentum from top to bottom. If you're under the 21, right, it's the same discussion. We have bullish momentum or do we have bearish momentum? So looking at AMD here, we took our entry yesterday under the 21, but notice how momentum is completely intact. So the move under the 21 wasn't enough to kill the structure or the momentum. Still have green 10x bars on a monthly chart down to a daily, 60-minute, 30-minute, 15-minute. So let me know if that makes sense, but I think, put it this way, your daily squeeze, all it's going to do until it fires is trade between +1 and -1. I don't think the move under the 21 should be shaking us out. And if you got green 10x bars everywhere, you got a positive histogram everywhere, I like it for an entry. So with AMD here, grabbing that put credit spread yesterday, by the time we're up here at +1 ATR, we've collected a lot of our premium. It makes the move into +2. You're starting to cash out there. Where if you wait until AMD is nice and strong, you sell your put credit spread as it's up here at 155. Now you're looking for a move into 175 to take home the same paycheck. So I think as long as overall structure, as long as momentum continues to hold, it can be a nice little discount, put it that way. You guys are giving away the secrets to the weekly 21. Yeah, I wish I knew how to do these things. Thankfully, I got help. Yeah, Michael, that's good analysis, right? If you have a great looking weekly chart and then a good looking daily chart on top of it, that's a nice combo. It's kind of where we're at potentially with the indexes here. All right, a daily chart with stacked DMAs, green 10x bars, in the squeeze above the 21. That's pretty decent stuff. All of that taking place inside of this weekly chart makes it a little bit better. So you look for that in the individual stocks as well. Yeah, Brian, you see the fresh fade? Always got to keep a fresh fade. Always got to keep a fresh trade. All right, y'all. I'm gonna cut you loose here though. 10 minutes before the open. Um, but yeah, structure over everything. And just let me kind of clarify one thing. I'm coming to you from a swing trader's perspective. Right? Somebody who maybe wants to take 4 or 5 trades per month and give those trades 30 plus days till expiration. So when I say don't short at the weekly 21, what I'm referring to is, this isn't where I think you sell your January monthly expiration call credit spread. Believe me, when we get this volatility, if you're a day trader, you should be slicing and dicing this. I'm always coming from a swing trader's perspective. So just make sure we don't confuse the two. But go kick some ass, y'all. Chandler will take you into the sunset on Friday morning, and then I'll see you next Monday.